Okay, we're going to talk about this worksheet now. This worksheet is a really useful tool that we have at the end of our accounting period to bring all of our stuff together. Because remember, our ultimate goal is to prepare financial statements, right? So this worksheet is a tool we use at the end of the period to bring all of our things together and look at our adjustments and some of those kind of things, because remember, our goal is preparing financial statements. So this fits into the accounting cycle. We're talking about the accounting cycle in another video. This particular one, we're only looking at the worksheet, right? So we get to this point where we have the unadjusted trial balance, right? Now we know that we go through the whole accounting period, right? And we journalize all of our entries and we post them to the general ledger, right? And now the very first thing we do at the end of the accounting period is do what? We prepare this unadjusted trial balance, right? This unadjusted trial balance. Words tell us exactly what it is. It's the trial balance before we do the adjustments, right? Remember, adjustments are all of the things that we did in Chapter 3. So the way this thing is set up is we have the unadjusted trial balance column, or pair of columns, right? Debit and credit columns for the unadjusted trial balance. Next one is what? Adjustments, right? This is what we looked at in Chapter 3, another pair of columns. Adjusted trial balance, well, logically, that's what? The unadjusted trial balance accounting for the adjustments that we're going to make, right? So we have the adjusted trial balance. And then I have a pair of columns for the income statement and a pair of columns for the balance sheet and statement of owner's equity, right? So when you're doing this worksheet, you just start on the left side of it, right? And you work your way across, okay? Now, like I said, this fits into the accounting cycle, but we're just looking at the worksheet, right? So what we're going to do now, we know that we have our trial balance and it balances at the bottom, and we're going to look at the adjustments, right? Remember, this is the stuff we looked at in Chapter 3. Down here it tells us the company earned $9,000 in fees that were not yet recorded at year end. So this is what? An accrued revenue. We need to accrue this revenue because we've earned it, but we haven't recorded it yet, right? So remember, accrued revenue, we're going to do what? We're going to debit accounts receivable because now people owe us money, right? And I'm going to credit fees earned because I've earned that money. So I come up here to accounts receivable and I debit that for $9,000, right? And I come down here to fees earned and I credit that for $9,000. So now I what? On my worksheet, I have recorded this adjusting entry. Same rules apply. Debits equal credits, right? Just like, because this is going to be a journal entry at some point, right? But right now we're just recording it on the worksheet. So that's how that first one. The next one says that what? The company incurred $2,000 in salary expense that was not yet recorded at year end. So that means what? That's an accrued expense, right? So we owe the employees this money. It's an expense in this period, but we haven't recorded it yet, right? So I have to do what? For $2,000, I'm going to debit salary expense, right? And here it tells just put it to accounts payable because we don't have a salaries payable. So I come up here to accounts payable and credit that for $2,000. So what we have is our adjusting entries, right? The accrued revenue and the accrued expense. If we were doing a whole problem, there'd be a whole big list of these things, right? But we're just going to look at this kind of simply. So I know that what? I want to total this up. Can't go on this worksheet until these columns balance at the bottom, right? So now what? We're at $11,000 for my adjustments column, right? Now we needed to do our adjusted trial balance, right? So that's just bringing the unadjusted trial balance, accounting for the adjustments, and we're going to fill it in here, right? So this is just mechanics. We're just moving things from one spot to another, right? So cash, $13,000. We didn't do anything, so we know that stays at what? $13,000. Accounts receivable, debit balance of $8,000. I debit that for $9,000. Those add together, so I know this is $17,000, right? Land was $85,000 debit. We didn't do anything to land in the adjustment, so it comes over as $85,000. Accounts payable, $10,000 on the credit side. We credit that. Credits add to each other, right? So $10,000 plus $2,000 means a $12,000 credit balance. Okay. Long-term notes payable, credit balance. We just bring it over because we didn't do anything to it, right? Same with the capital balance. That comes over because there was nothing that happened in the adjustments column. Withdrawals, remember, stays on the debit side. Fees earned, $70,000 credit that I credit for $9,000. We're going to add those, so I have a credit balance of $79,000, right? Salary expenses, a debit balance of $54,000 that I debit, so it stays on the debit side, but it is $56,000, right? And we can't forget this $8,000 that comes over. Office supplies, we didn't do anything, so it just comes over as what? As $8,000, right? Now we brought everything over, accounting for the adjustments, right? And I'm going to run a total. This is going to end up being $199,000, and this is $199,000, right? If I add those up, that's what we'll get. So I have what? I have 3 sets of columns, each of them balance at the bottom, right? We have the unadjusted trial balance, the adjustments, and the adjusted trial balance, okay? Okay, so we have our adjusted trial balance, $199,000, right? Our next step is we're going to take this adjusted trial balance and we're going to move it over to the financial statement columns according to what things go in each financial statement, right? Remember, on the income statement is what? It's revenue minus expenses, right? So we know that on the income statement on the credit side, we're going to have revenue accounts, and on the debit side, we're going to have expense accounts. And the balance sheet in the statement of owner's equity, we know is assets equals liabilities plus owner's equity. So those kind of accounts, they're going to go in these pair of columns. Revenue and expense accounts go in those columns, right? Remember, this is in account number order, right? Which was assets, liabilities, owner's equity, revenue, and expense. So we know that everything above that line is going to go on our balance sheet because that's assets, liabilities, owner's equity. The things down here are going to go on our income statement, right? So we just move them across according to what financial statement they belong to, right? So in the revenue and we have fees earned and expenses, we have those, and then I have assets, liabilities, owner's equity up here. What you're going to notice now, though, is we got a pair of columns and they don't balance, right? They don't balance. But that makes sense. We don't want this one to balance, right? Because the credit side of this is revenue and there's expenses, right? And we know that revenue minus expenses is net income, right? Also notice that we don't balance on this side, right? We're off by, what are we off? $15,000 on both sides. So if we look at what we do is we take that difference, right? 79,000 minus 64,000. I write it on the smaller side, right? Or smaller side. And then I bring the total down, right? So label it net income, right? 15,000. Now I have what? A pair of columns that balance, right? Same thing on this side. 135 minus 120 means 15,000 difference. I write it on the smaller side. Bring my totals down, right? 79,000 plus 0, 135 plus 0, right? So now we have what? Those pairs of columns balance as well, right? Those balance as well. This is kind of a tricky piece of business to figure out, but it's slick. It just works. It works really well. Notice that on the income statement side, it's where? Debit side. On the balance sheet, it is on the credit side, right? If we had a net loss, it would be reversed, because a net loss means what? We'd have more debits than credits, right? So everything would just be reversed down here. So this is the worksheet. This is a tool at the end of the period that we use to gather everything together in one spot, right? Now, it's not really part of the accounting system, right? It's not the journal or it's not the ledger. So we have to take these adjusting entries and we have to get them into our journal and post them to the general ledger. So remember, what did we do? We debit accounts receivable, credit fees earned, and we debit salary expense, and we credit accounts payable, right? Those are adjusting journal entries. Remember, bring our accounts up to date and match revenue with expenses. So that's what these two adjusting journal entries look like. Remember, that's we have to do what? Put these in our general journal, right? And then we're going to post them to our general ledger, right? So that's what the worksheet is, right? And we're going to, in the accounting cycle video, we're going to talk about how this fits into the process.